Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, November 30th. Okay, let's take care of the important stuff first. I hope you all had a great Thanksgiving weekend and had an opportunity to spend some time away from the charts, catching up with family. Hope you had a good dinner, however you guys decided to handle that. I spent the better part of the last 5 days driving to and from Michigan to Florida and back, but it was well worth it. Got to spend some time with my family, catching up. It had been a little while since I'd been with them. All things are doing well in Florida. Everybody's healthy as we head into the new year. So we had a great get together and time well spent. As I got back yesterday, it was apparent to me just how quickly, spending 3 or 4 days, not spending a lot of time in the charts, how quickly, things can get away from you, from the sense of really having the pulse, having all your charts up to the last minute, knowing all your levels like the back of your hand. It's going to take me just a little while to, get back into the flow. I have the, our basic charts here all tuned up for the presentation this morning. But if you were like me and you spent a lot of time, taking care of family business and recharging your batteries, it will take you a little while, whatever a little while might be, to get back in the flow of active trading. So what I'm going to do is, obviously be watching the charts and my open positions, and many of you are with me in those charts, getting back in the flow. But I don't feel the urgency to put on a trade in the first 15 seconds this morning. I want to get back into the flow of the price movement, the price action, and get back in tune with all of the levels and everything, and then get back into active trading once I feel that I do have the pulse and the flow of the market. So I recommend you do something similar, whatever makes you feel comfortable, however long that takes, whether it's till noon today or a couple days this week. That's fine. Wherever you feel comfortable and you feel like you're back in the flow and you see an objective level to trade against, then by all means make those trades. But just don't feel that urgency to, like you've been missing out for 4 days and you got to get right back in here this morning. That might be the worst thing that you could do, is, get back behind the 8 ball right away because you're not really in tune with the flow. So anyways, let's get into it. Here's SPY 2 hour. We have worked our way back up to this consolidation box between 350 and 364. Friday we closed out the day right at the top, but notice we've yet to take out this November 9th Pfizer COVID vaccine high at 264. And notice also that although we are at the high end of the box, we have done so on lower momentum and lower RSI. Now, those aren't, we said it a million times, those aren't sell signals, but they are things to respect and be aware of, that you want to see momentum building on positive price action, not going the other way. That doesn't mean that this can't break out and this turn up higher and break out here. In fact, that's what you want to see. Just be aware of it. There's a higher likelihood when you have bearish divergences in place that any little breakout or here at the top would be a point of potential failure. So anyways, that's where we stand on that. Now at 6:30 here, as I'm starting this video, the futures are indicating down just a little bit. I mean, SPY futures were down about 0.3%. Small cap futures were down about 0.6%. And NASDAQ futures were toggling, you know, plus or minus a couple points on the flat line. So a little soggy this morning, not anything to really worry about. So we'll just have to see how the price action develops today and in the days ahead. But if we're going to have an end of year run, it will come on a breakout above 364 on SPY. That holds. You know, maybe we break out and then come back and back test and then go. Maybe we just go. If for some reason we lose momentum and pull back, here are your pullback levels. 362 would be a level. We've got a mini gap here around 359, and then we've got our midpoint here at 357. We've been using this midpoint here effectively when we were below, and then breaking back above was our signal to buy back here early last week. And now we've spent time, you know, above. If we were to break back below 357, then the favored move would be back to the bottom of the box at 350. So just use all our principles here. If you're an active trader and you've been on top of this and you are ready to go, this is your objective short location at the top of the box. So you can stay short against the prior high at 364 and then see where it goes to the downside. And then you'll be looking for locations for potential support where you can cover that position and then go back long on a bounce. We can see it in a little bit more detail here on the 30-minute chart. Here is the gap up we had last week, and now we've been toggling, oscillating here right at the top of this trading range between 362 and 364. Now today, you know, depending on where we open, you're going to want to see 362 hold. If that doesn't hold, if there's a breakdown there, then I would expect a move back down to 360, which was where this move occurred, and that we have a well-defined level. Notice the volume over price bars here. That's always an indication for me where to look for support and resistance, but in this case we're above, so that'll be support. You know, if we were to break down today and drop below 362, I would be looking for a move back to 360 and a good likelihood that would hold. If it doesn't, then we move towards this open gap for a potential gap fill down to 357.50, and then of course take it from there. Moving on to the Qs. Now here we did break out. We're at or near the all-time highs above this 297.50 level. So today I think that 297.50 is your key. As we say all the time, you don't want to break out and then have price come back down into the range. So on any pullback to 297.50 in the top of this gap, I think you can be long with your stop set just below. But if for some reason we roll back down and fill this gap then probably going to come back here to this 293 level and give that a test. You can see that there's a lot of reaction points right here along this 293 line. So this should act as quite a bit of support, I would think, on any kind of pullback to that level. You can also notice that, if I were to draw a little trend line off of this swing low here and connect it here at this swing low, bringing it up, it would intersect at or near 293. So that would be another level of support on any move back down below. If you lost 293, then you're looking at 290 and lower. Obviously, that would be, marking some kind of a more significant pullback rather than, just little intraday fluctuations. Here's the 30-minute chart. I've dropped in a little channel here off of the swing low of last week down here at 287.50-ish, and we've made a nice advance since then. Tech has become resurgent to a certain degree, and we've broken out, and so now we've got this gap here as a first level of support, along with this lower part of this channel, and then these other intermediate levels come into play should there be a pullback. But I think you can stay long against this 298 level in the bottom of the channel, and then look for a move back up to the top of the channel towards 301, 302. Okay, moving on to IWM. This is our value cyclical rotation trade. You can see that this was the real ignition point on this trade. This is the November 9th Pfizer vaccine news, 177.63. We've broken out above that and moved to new highs. I've got an intermediate support level here at 182. I think that would be a good location to have marked on your chart, and also like 179.75 right here, and then you've got a little gap below. So short term today, I think you can be long unquestionably above 182. Any kind of pullback into there that holds, you can be long and look for further advance. But if that 182 level breaks, probably going to pull back to 180. And I think on this IWM, you got to be looking for places to get long if you're not long already. Here in the 30-minute chart, I've got this big wedge that's rolling here. You can see the support levels at 183 and then 182 with this gap. You don't want to see price break below this wedge. That could mean a further pullback, into 180 or into the high 179s, 177s, in this area here. So I think as long as this wedge holds, the bulls are in good shape. Notice here we've got a pending high level bull cross where we've gone up, momentum has come out, but notice there was no big price correction on this momentum drop. It was just a gentle pullback and reset. So what we're going to want to see here for the bull case is this PPO bull cross and then reacceleration, maybe come back in here to 183 and then go back up towards the top of the box or top of the wedge, potentially even break out in here in the 186s, 187 area. I still like the value cyclical rotation. Everything doesn't go to the sky. In fact, oil's off a little bit today, so you'll see energy shares and some of those things down today. Look for spots where you can get in. I still think the trade is well intact. Okay, let's run through FANG quickly. Facebook, consolidation box between 266 and let's just call it 280. We are near the top. So top of the box says objective short location, right? If you get a push into 279, 280, and you see that stall, then you can get short with a stop, just above at a location where you know you're clearly wrong, and look for a pullback back into the trading range. Conversely, if you get the breakout above 280, then that's your signal to get long and look for a move to 284 and then potentially back up to the highs near 298, 300. That would be a great location. Even if you hadn't done anything all this time, that would be a great location to get long, because with this consolidation box, let's say that's $14. If you had 14 onto 280, you're looking at 294, which would be a measured move target coming out of this consolidation range. So 280 would be a really nice location to alarm in your system as a place to get long Facebook. If it can break out there and hold, that would bode well for a move back towards the recent highs. Apple, not as energetic, it seems, as some of them, but I think the keys remain on Apple. On the high side, it's got to clear 118 for starters. That will open the door to make a push towards this downtrend line here at 119, and 120 is the level it needs to clear in order to get some potential running room back up towards the mid 120 area. As long as it stays pinned below 118, your downside first target is 115 and then 113. That strategy worked really well last week and into the week before that, where once it lost 120, that was a great location to work a short bias, coming down here to 118, losing 118, maintaining that short bias, coming down to 115, maintaining the short bias, back down here to key support at 113, where we eventually got the reversal. So notice on RSI and PPO, still not able to break above into bullish territory. So I wouldn't be too overly anxious to be long Apple until you see some evidence by price and the indicators that it can take out some of these overhead resistance levels. I would be looking for weakness, if anything, right here at 118 and 119 and 120. Those are your key overhead resistance levels, and you can fine tune it depending on how active you really want to be. But for a big long swing, I want to see this congestion taken out, and I want to see it break above 120. And if it can do that, then you can really anchor something here at 120 for a multi-day, potentially even multi-week long against 120, where price can make a run back up to 125. Tesla's doing its own thing, just keeps rolling. I've got a rising wedge here that you need to be aware of if you're, actively trading it. I wouldn't want to see price lose 580. I think if that happens, you've got the potential for a quick move down to 560. And then if 560 were to break, then, there's not a lot of support down here. Could see a move even back into the 525 range. But certainly has tailwinds. And I wouldn't be looking for some major short idea unless it, unfolds in front of you. If you're into trading Tesla, looks to me right here, if you got a pull into 580 that holds, then that's a good long entry point at the bottom of the rising wedge and the bottom of looks like last Friday's opening bar here, right here at 580. So if you can get long at 580, I think there's a good chance that this drives higher. You can see RSI is still very strong, above 70, and momentum is still very strong as well. Microsoft, very much like Apple, once it had broken below this 218, 217.50 area, we had a bearish bias that you could have rode down here to this gap at 209, where it eventually found support, got the reversal. Now, if you got long here and you're running, a multi-day long swing, I think you're in good shape. I've put a minor trend line here off the low. You can trail your stop up. I mean, you don't want to see price, come back down below 215 and then back into 212. If it did that and I were not in, I would be looking to buy right here at 212.50 along this line of support and resistance, and then look for a bounce back up. If it proceeds higher, I think a good place for a durable long is a breakout above 217.50, 218 that holds. That will set the stage for a move to this 221 area. And if that were to be taken out, then it can go on to, 225, 230, up towards the prior highs. But first order of business is taking out this congestion consolidation area. And until it does that, until price can prove it, I think you've got to, favor staying inside the box so you can trade it from that perspective. Amazon, still working our $50 increment levels that have been working great. Came down here last week to test 30.50, where it held, found support, got a bounce up here, and now price is wrestling with 3,200. I think above 3,200, that's your pivot. Above 3,200, I think you can be bullish and look for a move to 3,250 with the potential of filling this gap above. But anything below 3,250, I think would favor a pullback into 3,150, where you can be an objective buyer there with a stop just below and then look for a bounce back up. Google, and what I went ahead and did here just to show you, Google had carved out a high here at 17.95 and had carved out a low here at 17.20. Found support, moved to the top of the box. Remember our fundamental technical analysis principles. You buy support, you short resistance. So back up here to 17.95, prior resistance is your objective short, worked its way down, back to support, time to cover, time to flip, back long at 17.20, back up to the top of the box at 17.95, making that, several $70 toggles along the way. So here we are back up at the top of the box, and that's your objective short, waiting for a move back down to either the midpoint or the bottom of the box. And that will continue to work until it doesn't. And that's all you can do as a trader, is set yourself up at objective locations. And if today is the day that there's a big, Google breakout above 17.95, then you're stopped out. And if you're stopped out, that means something's changing. So if there's a breakout and you get stopped out, you can do one of two things. You can get disgusted with yourself and, lament your paper cut loss, or you can say, hey, something's different. Maybe this thing's going to break out now and go after this long, $70 wide, $75 wide consolidation. Measured move basis, 75 on top of 95 is 1870. So why not try getting long against your 17.95 with a stop just below and look for 1870? That would be your target. And if there's a year-end run, it could be much higher than that, because this would be blue sky territory, no natural sellers. That's what this consolidation is all about. Who wants to get long for the long term, and who, these people, there's a war going on here between buyers and sellers. And if the buyers emerge and take over, a lot of the selling or motivated sellers will have been exhausted. So even if you're not motivated to do a lot of trading inside this box, set yourself an alarm at 17.95 or 1800. And you're not going to get a tighter setup on an $1,800 stock than this one right here, where you can set a stop $5 or $10 below and look for a $100 move to the upside. That is a great objective, high risk, low reward trade location that you want to be aware of. Finishing up here with Netflix, a lot of consolidation over the last several weeks between 494, top of this box, and aside from this look below down to 465, you can see most of the consolidation has been down to this 477.50 level. And very much like Google, this is an objective short location. That doesn't mean you have to take it, but it is objective here at 494. And if price takes you out, if you get stopped, then something's different. And the difference being price is breaking out of this well-defined long consolidation, and you can get long against this 494 with a stop below, and you can look for 505 as your first target, then a gap fill all the way to 515, and then you still got another open gap up to 525. And if there's some kind of, big year-end rally, you could find yourself, back up at 560, in several weeks' time. But the key is getting long at the objective trade location where your risk is the lowest possible. Getting long right here, the only other place that would have been better is right here at support at 477.50. If any of you guys, took a swing long at 477.50, awesome. I mean, great trade location. You know that you're good to go on anything north of there, and that if you get stopped out, something's definitely changing, and that would be, a potential downside breakdown if the market, were to fall apart or something like that. But if you got long right here, you're good to go. You can trail up your stop. You can roll your strikes higher. I mean, you're in the driver's seat if you got this great trade location down here at the bottom of the consolidation range. But for the rest of us, we can either wait for the breakout at 494, or we can try a short against that level and look for a pullback down to either this 487.50 level, or even back down to the bottom of the box. Okay, that's a quick run through, actually not so quick, 32-minute video. Feels good to be back in the saddle, feels good to be back in front of the charts, in the trading chair after some time off. I look forward to running through our other charts, getting back into the groove, getting back into the swing, and then passing along my observations to you later today and into this week. So if you're new to the channel and like what you hear, please hit the subscribe button and then the alarm bell. You'll get all my content. You'll be notified of all that content, so you won't miss a beat. There's also helpful links in the show notes where you can subscribe to my content and get an email to your email box each and every time I publish, plus also link to the blog site where you'll find a lot of helpful articles on trading psychology and trade school tips and tricks that will be helpful to many of you aspiring traders. So this has been Chris Buss with Traders Profit Compass. Have a good morning of trading, and talk to you next time.